Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of SoFi Technologies, ticker symbol SOFI. And going over SoFi, it's been a few weeks. I can't really remember the last time I made a video on them, but I do want to point out some things. Earnings does look like, we saw this nice pop following that. I believe earnings was either on the I believe earnings was on the 29th, and I imagine it was before market open, but I might be wrong. We see this 20% pop attempt to fill this gap up here at $9.52, but really that gap would more properly be filled based on the close of January 2nd, which would be 965. So couldn't get up to those levels. And then we saw this big pullback the following day, down more than 8%. And yeah, really coming back down to this $7.50 line that I've marked in previous videos. And yeah, so I'm very curious to see what happens with this stock, if it's going to test the top of this channel more properly and then bounce, or if it's possibly going to break back into it and maybe fill these gaps to the downside. I had pointed out in, I believe, one of the first videos I put out on SoFi, this uptrending level of support. You can see that there are a couple pierces of it, so it's quite possible that line could be adjusted. But I had been thinking that there's a compelling case for not only the price coming down to retest that trend line, but also while doing that, fill these gaps. You can see this nice volume shelf down there. So, I do think support would be found there if price does drop that low. But right now we are above support, and also, psychological level, $7.50. Because we think in quarters, I don't know that we use quarters anymore, though, who needs change? But yeah, so there's that line there, and I was thinking I'd just do some Fibonacci retracements. I've been doing a lot of those on the channel to get an idea where this might be going. And so there are a couple of retracements that I could do, really to kind of wanting to identify the bottom. And so to do that, we want to take a retracement from the bottom to the top. And so I could do that from here as well as here. This would be kind of a larger picture type of levels, and this one will be more fine-tuned. And and this one actually probably offers more insights because we have not gotten too close to the bottom there. And so yeah, I'm just going to do that from the low here at $6.41 up to the high here. I'm not sure what that high is, so I'll have to adjust it. Let's see, and I've got to add the fib levels back into it. Kind of embarrassing. But yeah, and then I've got this 2618. It's probably not going to be useful, but it's on there anyways. And so yeah, I'm just gonna, that looks like it's on there just right. Okay, and so levels that we can see, the 786 is at a price of $7.28. So ideally, 750 is going to hold, but if we do want to be testing the top of that channel as support, I do think coming down to $7.28 would be good. Maybe just a tail or a wick of a candle coming down there and bouncing. If we do, however, close below $7.28, I do think that could be a bad sign that price could be going down, possibly doing a full retracement down to $6.41. But, before we get onto full retracements, and I don't think that it's going to be going down to $3.89 anytime soon. I think it'll probably find some support before then, but, that could just be a stair step down. But anyways, before I talk about this 100% retracement, I should look at this smaller scale run up here, because that might offer some finer tuned insights. So it's based on the low here that was found on January 19th, going up to the high here on the 29th. All right, and I'm actually going to color this one yellow so it stands out from the other one. And so what we can see here is $7.69 is the 786 retracement for this Fibonacci, and it's quite possible that's serving as support. We did see one close below it, but this actually could be a reversal signal with this spinning top here, and then this bar coming up. Will be interesting to see if the bar closes right around, let's see, $7.88. Not only the close on February 2nd, but also this red line that I have marked here. So I think that could be a really good sign that we have put in a bottom there, but it could also be a fake out. I do think that the bottom could be in here right around, especially, we do see these two tails coming down to pierce 750. So that could be a real sign that SoFi has found a bottom, at least for the short term. And then, we could look doing the retracement from up here to down here, as well as assuming the bottom's in from up here to down here, we could get an idea of where it might be going to the upside. But I do think that $7.69, this 786 retracement level could be key. But if not, if we do break lower, 721, which also does, kind of nicely correspond with the 786 from this bigger retracement at $7.28. We got this one at $7.21. The confluence of those two levels could suggest that will be, the ultimate bottom before a rally up. But of course, like always, that could break down. I could be wrong. But it is encouraging to see this volume shelf here. So I do think that 750 really just being a psychological level, I do think those are powerful. I do think that could be an approximate level there, a bottom, because the reason why it's psychological, why you do that, let's say you do this retracement and you see, $7.28. That's where the bottom's going to be. But if it doesn't hit that level, we think in quarters. So $7.25, that would not hit it. $7.50, the next level up, that would be a good place to have an order to really guarantee that fill for buying the dip. But, of course, it could dip lower, like getting back into that channel. And the 1618 for this shorter retracement is down to a price of $5.83, just below the psychological level of $6. And here it looks like a gap fill at $6.05. So that is definitely on the table as well. But, of course, that could be filled later on. And it could be that we never do really spend much time in this channel. Again, these gaps could be filled over here with the top of that channel serving as support. So do keep that in mind. And that would be, coming to these levels would be in July of this year. So we got some time before that happens. But yeah, I'm just going to do retracements to the downside to get an idea if this is the bottom, where it might be going. And so, yeah, I'm just going to take a retracement from $10.49 down to the low here. All right, and so from this retracement, don't see anything around $7.50. The closest thing would be the 236. And actually, this is, for us looking for resistance now, coming from the top down here, we're looking for a bounce. Where would that go to? And from this, speaking of this, we do see that price went up to the 618 and $9.24, got rejected there following earnings. Makes sense. Couldn't make it to fill this gap, showing some weakness there with the big wick up, followed by this wick and a big down day the following day. And so, yeah, I think the 618 right there, could not be held. And so we noticed that, with this close below that level on January 29th. So that was a clear sign that this was coming back, pulling back. Did get a little gap here. Let's see, the low on the 30th was $8.38. So that might be a gap to the upside to be filling. But yeah, I do think that the 618 very clearly shows the top there. The high on the 29th was $9.45, but you're never going to sell the absolute top, you're never going to buy the absolute bottom, and so these fib levels do give a nice idea about the price. And then I'll just do one more before I get onto charge point, one more retracement from the top here down to the bottom, and I'm going to color this yellow so it does stand out. And so, okay, where might this be going? If it were to go back to the 618, which it had done on the last run up, that would be bringing price to $8.69. So I do think that is a level to keep in mind. However, if price can't get up that high, there does seem to be, a confluence of these two levels, the 382 from the bigger scale, larger scale retracement. The 382 is at a price of $8.46, whereas the 50% retracement here is just 1 penny off at $8.45. So, that could really be, the next level, maybe to then pull back and test, $8 as support then before going higher, make an attempt at that gap at $9.50 or, a little bit higher, like $9.65, which was the close on January 2nd, as I had mentioned. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.